Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Velo3D, ticker symbol VLD. And so here we are looking at the daily chart on Saturday, May 4th, and VLD closed on Friday at a price of 23 cents per share, being flat on the day and not moving in the after hours. And so I wanted to go over this because it's a ticker that I recently got a small position in. Also, it was requested, so thank you for the request. And one of the things that was pointed out in the comment was that there might be a double bottom forming here. And so, I do think that is quite possible, but I do think that the price is likely going lower, and I'll go over the reason why in just a second. But looking at the chart here, it definitely seems like we could be forming a double bottom. Maybe we get a bounce perhaps up to this downtrend or maybe 32 cents. But I do see further downside is likely. But one thing that we might want to be paying attention to if we are to get a bounce, I would look for no closes below the low that was hit on April 25th. And so that was at a price of 22.27 cents. And so, just given that that was the low over here, I think if we are to be respecting, a double bottom, we would not want to see a close below that. While we have seen a lower low over here at a low of 21.1 cents hit on Friday, I do think that this could be a hammer candle suggesting a reversal, that we could be seeing some upside. So I do definitely think that is valid. But one reason why I do think that price could be going lower is because of a vote that we're all able to do, all shareholders are able to do right now, leading up until June 9th. So I'd recommend doing that if you are a shareholder. And so I'm just going to flip over to this screenshot here. And so this is a vote that shareholders have on a reverse stock split. And so the board of directors does recommend that shareholders vote for this. And, based on the current price, given that it's below $1 a share and it is listed on the New York Stock Exchange, it needs to be closing above $1 a share. So there is a need for a reverse split in order to maintain compliance with the New York Stock Exchange and to not be delisted. So I do think that this is a good decision, but having a reverse split always sucks. But it is what it is. And so here it does look like it's a 1 for 5 to a 1 for 50 option. And considering that the price is around 20 cents, I think at least a 1 for 10 reverse split would be conducted. So that is something to be considering. And so looking at the chart, the thing that stands out to me when thinking about a double bottom is actually a double bottom with the lows over here. So that's around 20 cents. And considering this inverse head and shoulders pattern that I had previously pointed out, and that there were multiple rallies up to 60 cents following that, I do think that we could be in a situation of forming another inverse head and shoulders pattern. However, it has not yet really even formed the head yet. I could see this as being the left shoulder, and potentially the head could be forming now, maybe coming down to 20 cents. The open on February 7th was at a price of 20.03 cents, so that's why I have that orange line marked there. And so if that is to be the formation of a head, and that is to be a double bottom formed over here, I do think that we could see a rally, potentially up to this, downtrending white line, but that will eventually be adjusted based on the neckline that's formed with the head, if that is to be formed. And then maybe, around the time of deciding on a reverse split or around that announcement, then the right shoulder would be formed, and then the stock could be set up for some volatility to the upside. Following the reverse split, there could be some big moves to the upside, and that could correspond with a measured move based on this inverse head and shoulders that, of course, has not yet formed. And so just thinking about that, as a possibility, if I take a measurement from the high here that was hit on April 29th, so that being at a price of, 28.99 cents, and then coming down to this orange line. So that is the measurement going from the neckline or the approximate neckline and then coming down to this approximate top of the head. And so then if I do move that to where we might see a break of the neckline sometime down in the future, who knows when that would be, I could see that coinciding with a return to 35 cents. And that is the level that I had marked here because that is the price that shares were sold at to raise some capital that caused this drop. And so I could see this pattern playing out and getting a return to 35 cents. But another thing that I do find interesting is that if we do move this measurement to here, it does get to approximately the same level as the lows before this raising of capital and the drop to below 35 cents. And so this measured move gets to the approximate low from April 9th, which was 40.65 cents. And so that is a gap that does need to be filled. But since the close on that day was actually much higher at 46.46 cents, that would actually be the more proper gap fill level. And so I'm wondering if maybe we do form an inverse head and shoulders. Maybe we do get a move to the upside corresponding to 35 cents. And maybe following the reverse split, we do get some volatility to the upside, potentially filling this gap, maybe even going back to 60 cents a share, which would of course then be, maybe $6 a share if there is a 1-for-10 reverse split. And so, while I was hoping that price would be residing around 35 cents, unfortunately, I do think that we might be seeing some further downside, but I do think we might be finding a clear bottom right around 20 cents. Also, that being kind of, a psychological level. We think in zeros at the end of our numbers. So that might be a nice level to pick up some shares. And so while I do have a very small position, I think for me personally, 20 cents does seem like a nice level to potentially buy the dip and then reevaluate. But for me, I do this very, very slowly. Don't get any emotions tied up into it. My position is very small, so it's no big deal to pick up some more shares at 20 cents. And if it does go lower, I can reevaluate, especially, if there's to be a reverse split and some bearish moves following that or leading up to it. Hopefully there will be some bullish moves following it. And going up to these levels that I have gone over. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and thanks for the request.